Welcome to the B.F. Anderson Technical Report for June the 27th. It's been a difficult 4 days. As you can see here, we've gotten a little bit of a correction here going in the NASDAQ. However, we are holding above the lower moving average, so this continues to be on a buy signal. What's been complicated has been that we're going through rotation. There's a group of stocks that have been leading this market that are basically starting to falter, and new leadership is starting to emerge. It's just something to be aware of. We'll look at that. You'll see that in the top five when we go through the top five. Now, on a weekly basis, we're continuing to be, the most important thing is we're above this 35-week moving average, and the 35-week moving average is turning up. So this is very positive. So overall, the NASDAQ looks good. The other five indexes look good, except for the small caps, which we'll see here in a minute. Now, we got a little bit of a pullback here, which has been in a very strong uptrend of the advanced decline line. You can see that we had 3 days of net decliners, but the advanced decline line continues to be in an uptrend. Things look fine there. Now, the high-low index continues to be constructive. We reached a kind of a middle ground area. Now we're starting to rally. On the high-low, on the number of new lows on the New York Stock Exchange, yesterday we had 47. The day before we had 80. We've been kind of trending above this 40 number, which is not really that good of a sign. It's just telling you that we are in a correction, and a higher number than we want of stocks are making new lows. On the long-term indicator, which is the 10-month moving average versus the 20-month moving average, you can see that the index is above the upper moving average. The upper moving average is flattened out. Hopefully we get it turned up and we get into a strong uptrend like we saw between 2016 and 2018. Now, this is where you saw your window of opportunity. We got into, this is what happens to most people, is that we get into an extreme fear reading and everybody freezes up and won't do anything. This is when you want to add money to your portfolio. When you get these extreme fear readings, it's just telling you that it's probably going to flip and go the other way, and that's exactly what's happened here. We've gone from extreme fear to fear. Now we're neutral, and we're just not too far from getting into greed. So the sentiment is changing more towards the negative because it is a contrarian indicator. The 200-week moving average continues in an uptrend. We get down, we test it, we make a new high. We pulled back again in May. We rallied to a new high. Now we're getting somewhat of a pullback, but this continues to be the S&P continues to be in a very strong uptrend. Now, the biggest problem in the whole of all the indexes is the Russell 2000, which is the small cap index. The problem we got here is the 200-day moving average is in a downtrend. Also, the index itself has not broken out to make a new high like the other indexes. In fact, you've gotten a pullback back below the 200-day moving average, which will continue to pull it down. Now, I read some reports on this, and basically what it's been saying is that the small caps have been underperforming for a long time. And, this recent underperformance is not a shocker because it's been going on for a while. Now, I really believe that the small caps will get going when the economy really gets going. Now, we all know that the economy is improving, unemployment is good, all those things are fine, but it really takes a strong economy to get the confidence up where people will step up and buy the small companies. Now, on the value line geometric index, we continue to see here we're making higher lows. We actually got back up above 520. You can see here that what's happened here is that the value line geometric, which is a market equally weighted index, not market cap weighted, which somewhat measures the average stock, has really gone nowhere since 2016. So we rallied, we got up above 580, pulled back last year, rallied back up above 540, but we've been pretty much stuck here, and it's frustrating because it really says this is what the average stock is doing. Now, on the yield curve, just kind of keeping up with that, being that it's in the media, whether it's important or not, I really just don't know. But it is improving. The yield curve hit a new high here, back in early June. Then we started to see, they compress, and then we went on to another new high here just recently, and somewhat of a pullback. Now, what's happening here is that 10-year Treasury bond yields are going up faster than the 2-year Treasury note yield. And so the big word is that if we get inversion, meaning that the 2-year yield goes above the 10-year yield, well, that means credit is shutting down. In other words, the banks make money on a spread. They buy money with, where you make deposits. They buy money cheap, and then they have loans that they sell expensive. So if you get the inversion, it's going to shut credit down. I'm not seeing an inversion. Now, there's an argument that you should use the 3-month bill versus the 10-year note, but I'm not convinced of that. Now, this isn't something new here. I'm looking here at the Prudential High Yield Fund. Now, this is just a proxy for junk bonds. And I want to make a point here because everyone's really fearful of recession and everybody's talking about recession. Well, when you have recession and fear of recession, there becomes a fear of defaults. So when the junk bond indexes are going up, it's telling you that the market is not concerned about defaults. So just to look at a comparison, this is 2007, 2008, which was the Great Recession. You can see here that this particular fund, which is junk bonds, was pretty much in a downtrend, sideways action, then just total collapse because everybody was fearful of recession and also fearful of defaulting bonds. And you can see that as of now, which is, as of today, this graph looks nothing like this graph. So the junk bond market is not discounting a recession. Now, also, just to kind of take a look at another idea, I'm comparing gold to the S&P 500. So when the graph is going up, it means that gold is doing better than stocks. Now, when the graph is going down, it says stocks are doing better than gold. So gold is a fear asset. And so when everyone's worried about, economic collapse or economic recession or whatever you want to call it, this graph would be going up. So again, as a comparison, I went back to, the year 2000 just to make the point there. And you can see here that gold was consistently doing better than stocks because we were in a recession and people were fearful. Gold is a fear asset. Now, also just a quick snapshot of the global Dow. This is just showing you another problem we're having here with the slow economic conditions is that mainly Europe and a lot of the international markets are slowing and are very slow. So we're watching this particular index just to see if these international stocks pick up, and they are looking better. They are looking better. So if we could get the international picture improving, that would be great. Now, here's the top 5. Now, you're going to see different names here. Now, here's an old name, though. This is Chipotle Mexican Grill. We've kind of got pretty much a long, flat base going here, but it does make the list. This is a company called Enphase Energy, which is, solar inverters. Broke down below the 10-day moving average, just kind of not really looking like it's making new highs. We're not seeing a lot of new highs here. Here's an industrial properties, innovative industrial properties, which are real estate development. This is an interesting stock, but it's awfully volatile. Look at how wide these moves are here. So it's, real estate development seems to be in an uptrend. Now, here's a biotech company called Mirati Therapeutics. Now, they're involved, and I'm seeing, this is kind of where I am seeing some of the rotation. There's a lot of talk going on about innovative cancer therapies. Now, you notice I use the word therapies, not cures. It's kind of like AIDS, the AIDS epidemic, when they basically came up with ways not to cure the AIDS, but to treat and have treatments. So innovative cancer treatments are really kind of getting a lot of attention here. These companies are doing quite well. So that's the business of Mirati. Now, last but not least, we have a company called Snap, which is like a Facebook type of thing, and continues to be in an uptrend. So all in all, what I'm saying is the indexes are fine, except for the small caps. We really would like to see some improvement there. However, it does appear that we're seeing a lot of rotation, and you just really need to be on your toes about that and be careful about going into old names that have been red hot, because they're starting to look to me that they're stalling out. Call me if you have any questions.